OneMedRadio welcomes Shawn Leon, president of GreeneStone Healthcare Corporation, a public company operating medical clinics in Ontario. GreeneStone trades under the symbol GRST. So thank you for joining us, Shawn.
Thanks for having me, Matt.
I want to start with some background. What kind of clinics does GreeneStone operate, and where are they?
We have two principal lines of business, Matt. The first is an endoscopy business, and the second is a mental health and addiction treatment business. The endoscopy business is about one-third of our business, and this is a government-paid service. So in other words, the government funds the procedure, and we are paid by the government healthcare system. Both of these clinics that we do endoscopy in are in Toronto. One is a rather large 8,000 square foot facility, and the other is a 2,000 square foot facility. We do colonoscopies and gastroscopies principally under that line of business. The other line of business we have is the addiction treatment business. We have two facilities. We have an inpatient facility north of Toronto, beautiful area, cottage country area called Muskoka. Property is 43 acres. It has approximately 50,000 square feet of buildings on it. We have currently set it up for 36-bed capacity, but we could obviously extend that with the size of the facility we have. We also have a 3,600 square foot outpatient and aftercare facility in downtown Toronto, and that is where we see patients, so we do assessments and do outpatient and aftercare treatment.
So what expansion plans do you have?
The main location for let's just say the organic growth of the company, in the main location for the endoscopy business is an 8,000 square foot facility. We're currently renovating that facility, and we're adding 2 more procedure rooms, and we're adding a surgery suite. So all of our endoscopists are general surgeons, and that would make it very easy for us to have them do general surgery in the facility that we have. So we'll be expanding into the surgery business, and that will add more of a private paid option to that endoscopy business, which will improve the margins and expand the revenue possibilities. We are also folding in a clinic operated by one of our surgeons in the downtown Toronto area, which will expand our locations to 3. And, of course, we always have our eyes open for acquisitions of other clinics operating within our geographic area. The facilities for mental health and addiction treatment, we've always said that in the next 24 months we will grow to 200 beds. We hope to do that through organic growth by building our own beds and facilities, and also by acquisition. I think the biggest area of growth for us will probably be in the addiction treatment business that has the greatest demand and the least served type of health care here in Ontario.
So I want to shift gears a little bit. In your opinion, what is the state of the healthcare system in Canada, and where do you think it's headed?
Well, the situation in Canada is very different than many Americans might think or expect. We do have government health care here, and it has been here since the 1950s. But as population ages and as costs in the healthcare system go up, and more people are using the system, the ability for the government to continue to pay for health care is more and more affected every year. So although we have excellent health care, there's a growing number of services that are not funded by the government. And we also have the issue with the cost of government-run facilities such as hospitals. The government is now starting to take things that don't need to be done in a hospital and pushing them out to the private sector to help cut down on costs, and that's something that's actively happening now in the endoscopy business. In Ontario, the government would like to have all the endoscopies not done in a hospital unless they're absolutely necessary in an emergency situation. So that will benefit greatly for businesses like ours. As well, they're cutting procedures, so something that may have been covered by government health care 2 years ago may not be covered this year. And in our mental health and addiction business, the government doesn't do a great job in providing great treatment for addiction, and so therefore they're leaving the door open for private operators to provide a much better service and much more effective service in that particular line of health care. So that, again, opens up many opportunities for us. The situation in Canada is that it's moving a little bit closer to the way the American healthcare system works, and the fact is the American system is moving a little bit closer to the way the Canadian system works. I think we'll end up somewhere in the middle in both countries.
So, Shawn, let's turn to company organization and financials. Firstly, what are the advantages of being public, and specifically why in the U.S.?
I think it was an advantage for us to be listed and traded in the U.S. I think many of the investors in the U.S. understand healthcare companies far more than they do in Canada, only because there's been a history of government healthcare here where there were not many privately run healthcare companies. That's obviously changing and growing, but it's something that's a little still foreign to the Canadian investor, and the American investor is much more adept in knowing about different companies that are providing, or for-profit companies in the healthcare sector. So we felt it would be better to be listed in the U.S. We also are listed in a public company because we know that there's a tremendous amount of growth opportunity, not just in Canada, but also the U.S., and we hope to continue to expand and grow, and therefore we'll need to have access to capital. And obviously, as a public company, it makes it easier for us to make acquisitions where current owners of businesses would continue to have equity by acquiring shares in the company. So it suits us very well for this company and for our particular sector in the industry.
And what recent news do you have?
I think the big news for us is that we focus on getting our balance sheet in order and continue to grow our business. We're really turning the corner into providing fundamentals of a business that are typically measured, such as income and revenues that continue to grow and expand. And of course, the balance sheet's always very important. So we're in a concerted effort now to clean up our balance sheet, get rid of any debt that we have, and to focus on that for the next 6 months. That is really a little deviation from where we were 6 months ago, where we were just focused on growth, acquiring and increasing revenue. We've gotten to a very comfortable level of revenue now. We should be profitable in the second quarter. It looks like we'll be profitable this quarter. We hope in the next 6 months to have a squeaky clean balance sheet, large increase in revenue, and be poised for the acquisitions and the growth that I spoke about earlier.
Sure, and you touched on revenue. So in 2012, you reported a 230% increase in revenues. What drove the increase?
That was primarily the addition of the mental health and addiction treatment business. We derived most of that increase out of a new line of business, a growth that we've accomplished since we started in 2010. This healthcare business has been very large and fast. We obviously will not be able to keep up that rate of growth organically unless we have another acquisition, although our rate of growth will continue to be very good. And that 230% was great, and we hope to continue to grow the business very rapidly. I don't think we'll have that same type of increase this year since we're halfway through the year, and unless we have another acquisition or an acquisition, our increases this year will be more in the order of 50% growth, but we still feel that that's a great accomplishment for this company.
What factors can we look at around valuation?
What happens in our business, and I'll focus on the addiction treatment business for a minute. Typically, earnings are a way of looking at valuation for a business. In our case, we have a simple correlation between earnings and the number of beds that we have. A typical addiction treatment center may generate in the area of $100,000 of income per bed that they have, and that at a 10 multiple would be $100,000 of net income. So we say that a bed's worth $1 million. It's a pretty easy way to value a bed. And in the 2006 through 2008 time frame in the U.S., there was a large number of treatment centers that were acquired by some of the private equity firms, and the price per bed that was being paid at that time was between $1 and $1.4 million per bed. Those numbers softened through the recessionary years after 2008. I think some recent transactions would be in the $500,000 to $700,000 per bed range. But we, as a conservative valuation on a bed, we would say that a bed is worth $500,000. So if a company has 100 beds, then we'd have a $50 million valuation. And if we went to the $1 million mark, which is not so conservative, then obviously we'd have a $100 million valuation for 100 beds. So we look at our company being at 36 beds and growing to 200. We look at, sort of we're going from something that's worth $36 million to $200 million. And that's a really easy way to look at the valuation. The income tends to be pretty steady across the sector. and we're in that private bed space where the revenue that is charged for a stay in one of our beds is ample to generate that kind of income.
Give us some highlights from your most recent earnings report.
Well, the interesting thing about our earnings is that the two biggest factors in our expense side of our income statement are labor costs, which are by far the majority of our costs, and our facility costs. This has been a focus for us in reducing our labor costs and our facility costs. And I think that if we factor in the current labor costs and facility costs together with the increased revenue, those are the three main components of making us a profitable company. We continue to increase revenues, which is key, obviously, and we're on track for the containment of our facility costs and reducing our facility costs with these new leases that we've signed in the past couple of months, and also with a plan to implement the acquisition of our property in Muskoka, whereby we'll replace a rental payment with a mortgage payment, which would be approximately $30,000 per month less, and that will show a significant gain to us. The labor costs are the one component that really need to be very contained, and we've been overly generous, so to speak, in hiring and paying for great people in order to get our business up and running. And we're finding that we're fine-tuning that group of employees to the best, and so far these reductions in labor have not shown themselves quite as much in the first quarter, but I think they'll start to show in the second quarter and continue to show how we're reducing and containing those costs in the third quarter.
So lastly, in your opinion, will there continue to be market opportunity in these kinds of clinics?
Absolutely. I think the opportunity will very, very good for the next 20-odd years as our baby boom population grows older and requires more and more care. I think operating medical clinics in general will be a good business.
That was a company snapshot with Shawn Leon, president of GreeneStone Healthcare Corporation, a public company operating medical clinics in Ontario. GreeneStone will be presenting at the upcoming OneMed Forum, June 26th and 27th. GreeneStone trades under the symbol GRST. For OneMed Radio, this is Matthew Margolis, signing off.